So, nochmal einen wunderschönen guten Abend. Ich freue mich, dass Sie trotz des starken Wetters sich eingewählt haben zum Webinar mit Cartier Resources. Wie Sie sehen, Philippe Cloutier, CEO, ist bereit. Wir haben einige spannende Themen vorbereitet. Einige von Ihnen kennen Cartier Resources schon. Wir werden nicht zu sehr ins Detail eingehen, was die Projekte betrifft, sondern eher auf die aktuellen Entwicklungen eingehen und diese besprechen. Darunter geht es um die M&A-Aktivität in der Abitibi-Region rund um Val d'Or. Die letzten Corporate News von Cartier Resources, unter anderem den Royalty-Rückkauf und natürlich auch das weitere Vorgehen rund um die Chimo Mine von Cartier. Wir werden das Webinar auf Deutsch und auf Englisch halten, also Philippe wird auf Englisch präsentieren. Fragen können gerne auch auf Deutsch gestellt werden, jederzeit. Wir werden die Fragen jedoch sammeln und am Ende dann beantworten. Ich kann sie gerne dann übersetzen und auch stellen. Sollte das ein Problem darstellen, ist das gar kein Problem. Gerne können Sie die Chat-Funktion dafür nutzen. Die finden Sie rechts in dem Dropdown-Menü. Die können Sie gerne dann auch nur an die Organizer schicken. Und da stehe ich Ihnen gerne natürlich zur Verfügung, auch für Fragen während der Präsentation. And let me do this in English as well, since we've got some international guests attending this webinar as well. Welcome, everybody, and good evening and good morning to Vancouver and Toronto. Welcome to the Cartier Resources webinar with Philippe Cloutier. And given the circumstances in the Abitibi right now, I think this couldn't be more timely. Cartier Resources is well positioned to benefit from the recent M&A activity in the area. As you've seen, Chalice Gold is being taken over as well as Alexandria. And although we don't know who's going to be the buyer, we're going to find out very soon, I think. And Philippe's going to give us an update on Cartier Resources. We're not going to focus too much on the projects themselves, but we'll more focus on M&A activity in the area, recent corporate news, and of course, activity at Chimo. Philippe, your microphone is unmuted and the audience is all yours. I'm going to mute myself. And if there are any questions or problems, I'll be here listening in. And of course, we'll be moderating the Q&A right after. So thanks and yeah, welcome.
Well, thank you everybody for attending. As Kai just mentioned, for purposes, I'm going to be using the presentation that I uploaded this morning. It's a recent update on our corporate presentation, uploaded, dated July 2019. Not much has changed in the presentation itself since the last one, and so I will accelerate through some of the slides I have previously presented, but specifically on a few of the slides, I will slow down and point out the recent activity at Cartier and how that can relate to what's going on from the city of Val d'Or right up to the Chimo Mine project. So we could basically skip the first two slides, the cautionary statement and the title slide. Again, very rapidly, a reminder of our strategy. We were very fortunate to initiate and complete the acquisition of 4 projects with deposits on them in 2012 to 2015. 2016, we were very fortunate as well to attract the sponsorship or the legitimizing of our business model by Agnico Eagle. The Caisse de Dépôt had already been there, and soon followed JP Morgan. But since July of 2017, we've been drilling on the Chimo Mine project. We've done a phase 1, a phase 2. We've initiated a phase 3. So far, we've completed 109 drill holes for a total of 49,000 meters. Phase 3 that was recently suspended. It wasn't entirely stopped, but focused on the expansion of 3 zones that we think are going to be the ones that are going to reward the shareholders. We are currently in a process where we're monitoring closely the evolving situation, and obviously I hope you can trust us to choose the best solution that will reward the shareholders. And thereafter, obviously, we seek to repeat the process. This is an addition slide to the presentation that you've never seen. Well, actually, it was a slide that we had there in 2012 to 15. It's simply to remind people that most junior exploration companies are down here. and they do a lot of prospecting work, initial drill testing of anomalies and showings. And there's a rule of thumb in our industry: you basically have to review 1,000 projects like that to eventually get to a producing mine. We've decided to up the game, and our acquisitions in 2012 strictly focused in this, what we call the window of opportunity. We bought the Chimo mine, past producing mine, the Benoit project, the Wilson project, the Fenton project, and we have our original pipeline projects. Obviously, Chimo mine is the most advanced. What this slide basically says is we've decided to focus in this window because that's where most of the value is created at the least cost. I mean, you've got a deposit, so you've got demonstrated endowment, you've got demonstrated fertility for gold in a given area, and then you strictly focus on exploring the depth and immediate lateral extensions of that deposit. And obviously, because you're not starting blind, but you're starting with a deposit, you're able to rapidly evolve into a delineation mode and bring it to the market. And so that's where we think you've got decreased risk and increasing reward. Another way of looking at that slide is, Pierre Lassonde's infamous graph that was, has been modified with time by people like Brent Cook and so on and so forth. And so, although Chimo mine was a past producer and should naturally fall in here, we took it, rebranded it an advanced exploration project, and we've worked it all the way up to here right now. And as you've probably seen, there's a lot in play along between Val d'Or and the Chimo mine project, and so therefore it's getting additional attention, even though we've been drilling it for 2 years. I'll skip this slide because I've explained that concept before. We're entirely focused in the Quebec portion of the Abitibi Greenstone Belt, so we're down here. I'll skip this slide as well because I think most people know it. These are the 4 deposit projects. Chimo is down in here. And I've added some detail to this slide, which was also in the previous presentation, simply to give it a sense of scale. When you look at this slide, you see the Westwood deposit to the right-hand side of the long section, which is right here on the plan map. And then 60 kilometers away, you have the Chimo mine, past producing mine. And so the scale on the top portion of the map is, over 60 kilometer strike length of the Cadillac fault. And there's about, 24 deposits, of which I've only shown about 6 or 7 here. But the bottom part of the map basically shows you a different scale, where you go from surface to below 1,000 meters below surface, another 1,000 meters. So these are 1,000-meter tranches. And so the LaRonde deposit, as you could see, goes down to over 3,000 meters. The takeaway from this slide, obviously, gentlemen, is the fact that the surface footprint of these deposits never really exceeds a few hundred meters, and therefore the deposit itself fits inside one claim. And therefore, over a 60-kilometer length or distance, you're only going to find maybe a dozen or so deposits. And so it just simply, I just put this here to remind people that you may be tempted to think that, hey, you need a large land position to find deposits. But our approach is quite different. Once you've identified the deposit, the best vector is at depth. And this slide shows that. This next slide shows you, if we go back, there was the LAPA deposit right here, which is, was explored and produced about 825,000 ounces for Agnico. And so when Agnico signed up with Cartier, I'm guessing that part of their inspiration for doing that was the fact that they could see a potential for Chimo becoming like LAPA. I've respected the scales here of the Chimo mine versus the LAPA mine. And in this slide here on page 10, you can see on the left-hand side, left-hand side, you can see the LAPA long section with respect to the Chimo long section. You can see the surface. You can see how the start of the LAPA deposit compares to mid-production at Chimo. At 1,000 meters, the LAPA deposit was still alive, and it went down to about 1,600 meters. And we put the same scale long section of the Chimo project side by side with LAPA, simply to compare the geometric similarities, the fact that the main vector is an elongation vector towards the depth. The fact that they conducted all their exploration from surface and then delineated the ore body and decided to, sink a $200 million shaft to then mine the deposit. At LAPA, they mined 825,000 ounces at a grade of about 6 grams. And versus at Chimo, they had produced about 400,000 ounces, which you could see here in black, right? From 3 different periods, the 60s, the 80s, and then they shut it down in 1997. And I like to say this again and again, not for lack of ore, but because the price of gold in 1997 was $400 Canadian. And so this dark red stuff that wraps around the black mined out mineralization, well, that's what was left over by Cambior. You could see the shaft down to 965, and you could essentially see what we did at depth along the main mine plunge. We drilled 2 diagonal swaths with 2 pilot holes, very expensive and difficult to drill pilot holes. And then from those pilot holes, we drilled a bunch of branch holes. And the reason we did those 2 diagonal swaths is to address the width of the plunge as well as the depth of the plunge. And by drilling 2 swaths, we're basically able to, prove up the concept that the main vector is at depth. Then we got lucky and found that the 6N1 zone, which is just 125 meters above of the page, does also continue down and most likely down to 1,600 meters, but also continues down to shaft level. But we were even more fortunate than that towards the end of the phase 2 program and discovered a brand new zone, again, at depth of something that had already been discovered in the 90s. And if I read off the grades here, we were getting just under 6 grams over 8.5 meters, 9.9 grams per ton over 3 meters. And if you look down over here, that kind of compares with what they were getting at LAPA at these depths, 9.3 over 2.8. So again, we've got a situation where, we believe we've mapped out something that is eventually going to go back into production. Obviously, one of the priority targets that we have is down here in the extensions of 5M4. It is a priority target because it will be added to what was found at depth at the Chimo mine and surrounding the shaft. And obviously, late May, we suspended drilling for 2 reasons. The first reason is that we had finished this pilot hole and conducted all the branches, and we were about to begin two other pilot holes, one down in here and one down in here. And from those two pilot holes, we were going to shotgun a bunch of branch holes here and here. Now, the reason we decided to suspend the drilling is that after having, invested so much time and energy producing what we think is quite a bit of success and getting no traction, we were basically investing at that point about $350,000 per month drilling and getting no love from the market from it. That's one of the first points. The second point was that it was a transition. We had to make a decision. If we initiated a second pilot hole and a third, it would have put our entire team on lockdown 24/7 to get the work done. And as you may know, we at the same time we had initiated resource estimate work for the phase 1 and phase 2 drilling all around here, and that also put our team in lockdown. Although much of that work is done via the external help of an independent consultant for resource estimate work. And the third reason, obviously, is, well, you've seen recently, we were confronted with the opportunity to take out a hefty NSR. Even though we didn't pay much for it, we believe that we've mapped out a situation where the NSR could potentially be worth north of $30 million. So that was a good thing for us. We might come back to this slide, but let's go through some other slides here. You've seen these before. You've seen that one before. There's the 5NE, 5M4 zone that plunges towards the center of the page down in here. So it's got the potential to generate a lot of ounces. And there you have it. Once again, the physical status of what we're doing. So right now, we've got resource estimate work being done in-house and externally as well. The importance of that is Cartier has purchased the software required to help us do this work. It is being audited, obviously, by the person or the group that is doing the resource estimate work. And because we're being coached and tutored to this, we're going to be able to apply all of that to the Benoit deposit, the Wilson deposit, and the Fenton deposit. And we believe that will, accelerate us on a successful path once we've found a solution for Chimo. I'm not going to touch on the other slides, the other projects too much, other than to remind people that we're not a one-trick pony. Essentially, after Chimo has rewarded our shareholders, we have the option to work Fenton, Benoit, and Wilson, which are in the vicinity of what we believe is going to be a very important mining district in the next few decades. A word on what's going on around Chimo right now. Well, this project here, this lodgings that you see here, is actually El Dorado. From El Dorado, right, the Integra, past the Integra project, right up to Chimo right now, you've got two recent M&As that are going on. You've got Alexandria that had a first offer by 03 in mid-May. Then there was a counter offer by Agnico. And then there was a counter offer by 03. And I believe there's a due date on that, well, this Friday or tomorrow. So your guess is as good as mine as what's going to happen. We'll just have to wait for that news. And then obviously early this week, 03 decided to double up and purchase the exploration ground around the Chimo deposit for a disclosed price of about $12 million. And so things are happening in this little short stretch of ground. And we believe we have one of the key pieces of the puzzle. And it will be interesting to see how this plays out in the next few months. I'm going to skip Benoit. I'm going to skip Wilson. I'm going to skip Fenton. And I'm basically going to leave you on this. A healthy cash position of about $5 million. Another $1 million will is forthcoming from the government of Quebec on two separate from two separate parts, and one in August or September and the other one in December-ish. So it's a very healthy cash position. We have some very strong support, continued support by JP Morgan, Agnico Eagle, the Caisse de Dépôt, and a very strong retail following long-term shareholders. And so, gentlemen, I'm going to open up the floor for Q&A. I think I've addressed the recent activity of the repurchase of the NSR, the phase 3 drilling, the resource estimate work, and the how can I say, the competitive tension that's being built in that short stretch of ground from Alexandria right to O3, right to Chalice. Kai?
Yeah, no, I'm here, and I think this was really a really good and quick update here. And as you mentioned, the floor is open now for questions. We do have a questions function. You can use the chat. Feel free to send us the questions in German or English. Gerne können Sie uns die Fragen auf Deutsch oder auf Englisch schicken. Gerne übersetzen wir diese für Sie. Das ist gar kein Problem. We got one question already, and it's regarding the wireframes and when those will be visible in VRIFY. And what kind of information can the investors get from that? I'm sure you can guess who the asker is, and but I think this is a really important tool is VRIFY. Because of the lag here on GoToMeeting, I don't think it makes sense to show it here. But I think verify.com is the website that people can go and take a look at the resource model, and you can elaborate on that. One quick note. GoToMeeting is telling me we've got 17 minutes and 38 seconds before it shuts us off because we started the broadcast early. Okay. So quick answers to all the questions, please.
Sure, as much as I can. The wireframing process is really, really fun, but it's also really, really tedious. One way to take your resource estimate work from $150,000 or whatever right down to shrink it to a few tens of thousands of dollars is to have the work done. Do a lot of the work yourself because you understand the geology and the mineralization, but obviously that doesn't address the independence issue. So we have that wireframing work audited regularly by a resource estimate expert. The added benefit to that, as I say, is that from that work, we're building a knowledge base to apply to Benoit, Wilson, and Fenton. And so it's ongoing work. It needs to be audited and validated by an independent consultant. And because of that independence, we have no or very little control on the time and the official results. But once they are given to us, we send them to VRIFY. VRIFY uploads it. Now, there were some really pleasant surprises that I guess I can make public because they're, in the 1980s, the mine was operated by Luvem, and at that time, most of the information was not digital. And when it was digitized, audited, and brought into the 3D model, what happened is they only gave us the mineralized intercepts that were mined out. However, historically, there was mineralization that exceeded what was mined out. Not always high grade, but locally quite interesting. And so in the course of the wireframing, we discovered that 900 holes had specific issues like that, where we had all this, the assay results, and we could re-input that into the model. So that was one very nice surprise. And for every 10,000 ounce tranche of gold, that's $18 million. So, and since you've got an existing shaft, it's well worth it to target these little pods, surrounding the shaft. So, so the wireframing of the mineralized zones is one thing, and then we also wireframe what was mined out. So the external wireframe minus the internal wireframe is going to be the resource, the leftover resource, or the resource estimate. And that has to be done, and that's almost complete for 85% of the project, the core stuff that we believe is going to be the profit. And then there's the outlier zones that are still, attractive targets, and the remaining 15% that will be done through the rest of the summer. I believe mid-July, the VRIFY site should have all the updated wireframes. That's my answer.
Short and sweet. Nice.
Sorry.
We get another question. What's the current condition of the shaft? Is it usable, or does it need expansion in diameter or depth? And what kind of mechanical equipment do you need to upgrade it?
Okay, that's the other part. I could answer part of that question, but the other part of that is being conducted through what we call napkin studies, back of the envelope work, and we're actually plan on mandating a different set of consultants to map out the mining costs and to go underground. For the first part of your question, is the shaft still accessible? Yes, that's one of the first things we did before we bought the projects. We hired on retainer the past producing superintendent of the deposit, and they validated that the shaft's in operable condition. It does not have to be resized. Modern technology, what you do in modern mining is you don't resize the shaft, you simply resize the elevator. You just make it bigger, and then you put a bigger cable on the hoist, and so you're able to haul just as much, if not more, ore than was in the past. That's my answer.
Okay, fantastic. I have another question. You mentioned at the beginning that you're looking for the best solution for shareholders.
Yeah.
Do you want to elaborate on that? Like, what's your shareholder, obviously, as well as am I, and as are many on the call from what I can see. What's your preferred outcome of all of this? If you can hypothetically or ideally.
Okay, that's an easy one. My preferred outcome is exactly as in slide 2 or 3. Find somebody who's hungry for ounces and will buy these, so that we could take that huge amount of cash and dividend part to our shareholders and repeat on Benoit and Wilson and Fenton. Right now, from a geological standpoint, it's kind of frustrating not to be drilling something like Benoit, because we don't want to leave Chimo unfinished business. We feel that Chimo will go back into production, and so we're, my ideal situation is find a way to get Chimo producing, and then start the process again on Benoit.
Okay. This might be an unfair question, but you're obviously sharing a building with Agnico. Everybody can find that out. That goes on Google Maps. What's your gut feeling? Is Agnico going to give up Val-d'Or?
No, and let me tell you an anecdote. I mean, many years ago, I was hosting, me and a bunch of geologists were hosting a local visit by the Chamber of Commerce. I think at the time, some Swedish company wanted to build a distribution plant for its products. I think it was Sandvik or something, and it was either here or Sudbury and whatever. And in our presentations, we kept alluding to the fact, or basically apologizing that Val-d'Or was an old mining district or old mining camp. And the Swedish fellow says, you people are funny, because where I come from in my hometown, we've been mining for over 800 years. So your notion of old is kind of is out of place. And so when we look at that long section at the very beginning of the presentation, of the Chimo presentation, and I'll get to, and that's how I'm going to get to answering your question. LaRonde is a prime example. The deposit does not end at 3,000 meters. It continues, and you see this in Ontario as well. So I believe companies like Agnico, Kirkland Lake, the Gold Corps, they know the value of camps like Val-d'Or and the Abitibi, and they could be mining for many decades to come. And so I don't think they're going to give up their position in Val-d'Or. And I don't think Kirkland Lake would do that either, or Gold Corp. I think these old, long-lived mining companies, they know the value of endowment and proven mining districts.
Okay, we got 2 more questions in about 9 minutes.
Go ahead.
So one more question is, what are your all-in drilling costs per meter, and have they increased lately given the increase of activity and demand for rigs in the camp? That's one of the questions, and then the second one I'll answer after. I'll ask
okay, there's a 3-part answer. When you're doing short holes, it's about $100 per meter. In our case, because our projects are near towns. When we're conducting directional drilling like on Chimo, it can be between 200 and 250. It's higher when we have only one machine and one directional drilling crew. But a directional drilling crew can actually service 2 to 3 machines. So our objective when we start drilling on phase 3 down at depth is to bring a minimum of 2 machines. When we suspended the drilling, we had 1 machine, and now our objective is to come back with 2, if not 3, because it's economies of scale, and you're able to do that deep, precise drilling for about $200 per meter. And your second part of your question was is there manpower? There is a lack of manpower, drillers, and assaying capacity when the boom goes up. But there's always a preference for projects that can drive volume of assays, volume of meterage, and there's also a preference for projects that contractors feel will lead them to more work in the future. And projects that have mine potential get that advantage.
Okay. Second to last question, I guess, is can the deepest intercepts be taken into the resource calculation, or do you need more drilling to qualify them for the resource update or for the resource estimate?
That's a very good question. And again, for a remote project where you don't have legacy data, that could be, let me just put this panel out there. There you go. That would be an issue. In the case of a past producing mine like this, and that was another thing that we discovered with the consultants, is they will run geostatistics and mathematical analysis on all the historical stuff and establish a mathematical or geostatistical behavior. And then they'll run another algorithm on the recent drilling, and if it jives, then they've got a higher confidence level to produce a better resource number. Obviously, for us at Cartier, our thinking when we started this, our objective was not to do a 43-101. Our objective was to demonstrate that this mine or past producing mine will behave exactly like the other mines on the Cadillac fault, which is it continues at depth and it does have lateral extension to it. And our drilling programs were engineered, and a lot of it, with the help of Agnico and our team, in order to address that. So for sure that, the resource estimate guy will say, well, Phil, this stuff down in here between your 2 diagonal swaths, if you had a few extra holes, I would bump them up into another category. We're fine with that. So we're expecting a much smaller number than what you would back of the envelope for this, and that's fine. It doesn't phase us at all.
Cool. No, fair enough. Fair enough.
Yeah.
Obviously, we got a pessimist here on the call because his question is, if there's no third-party action on Chimo in the next 12 months, what is your plan forward? Would you develop it yourself, explore Benoit, or any of the other projects?
That's also a very good question, and that's why I kind of smiled when you asked me that question. What do you mean by choosing the best solution? Well, in a case like Chimo, you know, when you tackle a project like this, you're always your angle is always to develop a plausible alternative, moving forward. And if we're a 28-25 million dollar market cap company, if this thing was like a 650 or 750 million dollar mine development scenario, that's not a plausible scenario. But because this is a past producing mine, it has the infrastructure, has a shaft down to 1,000 meters almost. You're not looking at multiple hundreds of millions of dollars to get this back into production. I mean, not from my, intuitively, that's not what I'm thinking. So it is possible to imagine a solution where the shareholders can be rewarded by spinning out this asset, creating a standalone company, and have it financed with some creative approaches, and then you're able to keep on drilling on Benoit, Wilson, and Fenton. I mean, bring in people that are creative thinkers, and they'll find a way. Our approach is simply technical. We'll get the technical work done, and I'm sure other people will find a way to get this into production.
Okay, great. We got our last question. We got 3.5 minutes left. So are there any share blocks available? Do you know of any interested sellers that would be parting for whatever reason right now from their blocks of shares?
There was about a month ago, and from what I've seen on the screen, they've left the party. I'm not aware of anybody that is looking to sell a moderate to large position. If it does come to my attention, tell the person asking the question to send me an email, and I will put them into contact with several of the brokers I know that may get that opportunity. But I personally am not aware of large positions wanting to exit.
Okay, no, fantastic. I think this is it. Philippe, thank you so much for your time. I think this was really informative. Everybody, thank you for participating. Vielen, vielen Dank, dass Sie sich die Zeit genommen haben an diesem warmen Donnerstagabend hier in Deutschland. Und bitte senden Sie uns E-Mails mit Fragen. Wir sind über Facebook, Twitter, LinkedIn jederzeit erreichbar. Meine E-Mail-Adresse ist hoffmann@soarfinancial.com. Schreiben Sie uns. Philippe is always available. Philippe ist auch immer erreichbar. And thank you so much. The presentation is available online. We made it available as a handout. And if there are any more questions, feel free to reach out. Thank you so much. We're uploading this video afterwards onto our YouTube channel. Give us a couple days. It is summer. We're here for wedding season in Germany, and
it's the 4th of July in the States, and it's right at the heart of a vacation. So yeah, hey, thank you for attending.
Our best to upload it immediately. Philippe, thank you so much, and thanks everybody.
Cheers. Bye now.